Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class if you've not been watching my videos. I did one just a couple of days ago. Disregard the guff, guys. Good evening, everybody. Welcome to another live stream with me, Charlie Lambden. This is Moving Home with Charlie. And I suspect that this evening's live stream is probably going to make me as unpopular with a lot of people as any of my other videos have ever made me. And I was hoping to have a quiet night off this evening. I've been overdoing it this week. I'm absolutely shattered. But I felt compelled to put this video out there because in the last couple of days, I've had a couple of one-to-one calls with people booking the consultation calls with me, and we had the private movers Q&A conversation last night. And the situations and the perspectives of buyers that I've been discussing has just made me realize something that I've been trying to say and hint at for a little while now, but I don't think it's getting through. It's getting through to some people, but not everybody. And I think everybody needs to understand this. And I think this is going to happen whether I say it or not. And so I'm saying it because I think if it's going to happen, it's better to know that it's going to happen. And it boils down to this. All the financial reasons that have existed for the last 40 years to buy residential property as an individual consumer, not as a business, not as a developer, not as a portfolio landlord, but as an individual, all the financial reasons to buy have gone, not are going, have gone. In fact, they went a couple of years ago, and they're not going to return in the foreseeable future. They will return one day, possibly, probably, and when that is, and how strongly they return depends on all kinds of things that we don't know whether they're going to happen or not, and when they're going to happen. But I've seen it in the comments many times, people saying homes are just a utility. They should be seen as a utility and nothing more. So I'm going to explain what I mean, break it down, because I really want everyone who's considering buying a property to make sure they've thought through all of these reasons before proceeding. And I'm going to explain why we got here, because if you understand how we got here, how we got to a point where homes are so overvalued that they are sucking the life out of the economy and people's wallets and people's incomes and people's pensions and people's future and people's inheritance, it'll make sense why that's happening. And also, I think that once this transition period has completed, we're going to be in a much happier, better place as a housing market. So there is a light at the end of the tunnel. I don't know how long the tunnel is. It's at least a couple of years. But I want to set it out, and I want to bust this hard-baked 40-year myth that bricks and mortar is safe as houses and it's a good place to put your money. It was, and it has been, and I did very well from it. And lots of people I know have done very well from it, but it isn't now. In fact, right now, you should consider buying a house in the same way you should consider buying a car. Because the parallels are actually all there now. And let me run through what I mean, right? A house right now, if you're buying it as an individual or as a family, is a depreciating asset right now. Okay? That is just a fact. CPIH inflation is higher than even the overstated ONS house price growth figures. So it is currently a fact that UK average on the whole, which I know I always go against those, and I'll break it down in a minute, but UK average houses prices on the whole are not keeping up with inflation, which means the houses are devaluing. For example, if you buy a house for £100,000 this year in cash, and a year from now, the market price is still £100,000, but inflation is still 3.2%, it's now only worth £96,800 a year from now. It's devalued because of inflation. It is a devaluing asset, even if the nominal price, sticker price, has stayed the same. Now, the ONS revised figures are currently showing that actually house prices aren't even rising nominally once you factor in the massive time delay of reporting and factor in their revisions. The most recent revisions that we've got are down almost £8,000. Now, let's separate out the four nations. Scotland and Northern Ireland. Northern Ireland is on fire for some reason. The Northern Ireland housing market is on fire and it's romping away at 5 or 6%. And in Northern Ireland, homes are appreciating faster than inflation. And therefore, there is some capital appreciation in homes in Northern Ireland currently. So I'm not talking about Northern Ireland. And what I'm saying, this video does not apply to homes in Northern Ireland. The same can be said in Scotland, but to a lesser extent. I don't have Scotland data, but I know that generally speaking, at the moment, Scotland house prices are not coming down in the same way that English ones and Welsh ones are. So I'm leaving that out as well. But in England and Wales, if you look at the data, once you've factored in the revisions that the ONS factors in, which is always down, then you've got nominal depreciation and you've got inflation and you've got the running costs of a house, just like a car, right? When you buy a car, you've got maintenance costs, you've got depreciation, you've got tax, right? Because you're paying for your home out of taxed income. And you've got energy costs or fuel costs, right? So running a home is like running a car. Now, that doesn't mean you shouldn't buy one. You should buy one if you need a home, but that is now the only reason to buy a home. Okay? For ordinary people in the ordinary sectors of the market, I'm not talking about the wild multi-billion pound market, leave that aside. I'm talking about the ordinary people in the six-figure housing market, and actually in the sort of below £2 million as well. Above that, it's kind of a weird thing. Every property does different things, but the running costs of those bigger houses have risen faster than smaller ones. So you've got maintenance costs. I mean, properties get eroded by the weather, right? They are not assets. They should no longer be seen as an asset, not as a financial asset. As a life asset, absolutely. A home is where you make happy memories. It's where you bring up kids if you can, and if you want to. It's where you grow as a person. It's where maybe you meet someone, and hopefully it's where you have happy memories. Home is where you live. A home is where you conduct most of your life. You spend more time, even if you're going to work in an office or in a place of work full 5 days a week, you spend more of your life in your home than you do anywhere else. So a home is a place to spend your life. And for that reason, it's very, very important. But it is no longer a financial asset. It's so important because I think this will help people really think through their buying plans and their moving plans and their investment plans. Okay. I'm just checking that you can all hear me. So what does this mean is going to happen? Well, first of all, how do we get here? We wouldn't be in this position if the following things hadn't happened in the last 40 years. If social homes hadn't been sold off without being replaced, creating a shortage, that would be one contributing factor taken away from the housing crisis we currently have. If buy-to-let mortgages for consumers had not been brought into being in the 90s, we would not have had 25 to 30 years of people buying up properties with buy-to-let mortgages on an absolute whim because it was so easy to make money because house prices were going up. The buy-to-let phenomenon will be seen by history as one of the worst things that happened to the UK housing market. Okay, but because interest rates have now gone back to long-term norms, and because the government's changing policies about landlords, it's become less attractive. And buy-to-let was only ever really viable and attractive because of house price growth being higher than inflation. That ship has sailed. All right. Even if you had a tenant sitting in your buy-to-let property not paying rent, you still at least had your value of your property going up. So you were still covered by that. Those days have gone, right? So not only is a buy-to-let mortgage more expensive, the buy-to-let proposition is now no longer a viable consumer. Oh, let's buy a buy-to-let, just one, and see how it goes. Okay, it really isn't. With a buy-to-let mortgage, I mean, if you're a cash buyer, that's a different question, right? If you've actually got cash to invest and you want to be in the business of landlord, that's a separate thing. But as a home buyer, that's one of the things that's massively led to house prices going up, because investors, private investors, were buying up properties that would have otherwise been first-time homes, and in doing so, priced out a lot of first-time home buyers. Then we had Help to Buy, which put 20% on property values, new home values outside London, and 40% on new home values inside London, and created a bubble inflation effect, which dragged all other prices up with it for 10 years, right? That has now come to an end too, and we are witnessing the deflation of that Help to Buy price bubble, and there are no announcements in the pipeline of anything like that coming along to replace it, at least none that I'm aware of. Okay, so social housing being sold off without being replaced, buy-to-let mortgages, Help to Buy. Then, of course, we had very, very bizarrely low interest rates for a long time, plus lots of quantitative easing, with the icing and the cherry on the cake being COVID cash, where, as per Alex's graphs, you've all seen, everyone got loads of cash came in and people were buying property with it. And in one final blast of house price rises during COVID, they just went, oh, and since then, they've just been, since early 2022, with inflation. So whether it's just nominal or whether it's real, they've just been coming down at different levels of the market. Now, I can hear some people saying, but Charlie, where I'm looking to buy, everything that comes to the market is going with multiple bids just like that. You've got to remember that everybody wants to buy the same properties when they come on the market. The nice ones that come at a good price are the ones that everyone goes to see. And so 20 people go and see it, 19 people get disappointed and are left feeling like, oh God, the market's on fire. No, the market's not on fire just because you didn't get the really nice property that was marketed at a sensible price. Everything's going for offers over. No, not everything is going for offers over. That's patently not true. If you look online, there is masses of stuff that's been sitting there for months and months, if not years, unsold. Yes, there are a few very localized hotspots where very particular property types don't come up very often, and they sell very quickly. There are segments of the market that are not suffering, but they are the exception. They're in the minority. Even those buying those, I would say, even if those are popular now, you cannot expect to make financial gains off them. What else has led to it? So all of those things that I've just outlined have led to artificial and overly stimulated house price growth. because all of those things have now ended, they are stopping the sale of more social homes. So right to buy is being phased out, the discounts being phased out, that's stopping. Help to buy is gone. Buy-to-let mortgages are no longer viable, really, for consumers. Okay, but this is good because it means that more people are going to be able to afford homes. And if fewer people are buying them for financial reasons, it means people will only be buying them because they want a home. And that might just allow prices to really settle. I don't think there's going to be a crash. I've said this all along. I think prices are going to continue sliding, both nominally and in real terms after inflation, okay, for some time. Not all prices, but generally speaking. Especially things like leasehold properties. I had a one-to-one video call today with someone who's trying to sell a leasehold flat in London, and they got a proper paid valuation, and they've dropped the price 12% below that, and they've still got no interest in it. And the agent is bewildered, and they are bewildered, and they can't understand why it won't sell. And it's because of the massive delay in house price reporting. Okay, so there is this big, roughly 2-year time lag before the true full effects of what's happening in the housing market actually come through in the wash, and we see the cold, hard truth at the end of it. And so everyone at the moment, everyone who doesn't watch this channel, which is most people, right? Remember, I might be the most watched moving channel on social media, but 90 something percent of movers still don't know about me and don't watch this channel. And so 90 something percent of movers are still going out there and going, oh, ONS says record house prices, and Halifax says record house prices, and Nationwide says record house prices, and house prices always go up, and it's a great financial decision, and we're going to get on the property ladder, and we've been dreaming of getting on the property ladder for 10 or 20 years, so let's just keep on buying. And all of those people buying like that now and going into bidding scenarios and with a big mortgage, I think, are going to live to regret it. Not necessarily going to lose lots of money, but they're not going to make any. Buying a home to keep it long term and pay off the mortgage and own a home to live in is a good reason to buy property. That's the only one. That's the only one now, right? And there are people right now who are still not coming to terms with the reality of what's happening in the property market. Some of them just aren't even aware of it. Some of them have heard it but don't want to come to terms with it. Some of it have heard it, think they've come to terms with it, but actually still haven't by a long way. And it's heartbreaking. And if you are someone trying to sell your property right now, you don't want to hear this. And if you're an estate agent watching this right now, you don't want to hear this really, because what you don't want right now is fewer buyers. But actually what I would say is this: as sellers become more and more realistic and prices start to ease in real terms, so that people can actually, so affordability improves, more people will be able to buy homes, and that is good. And transaction volumes should hold or pick up. I don't see transaction volumes coming down much. I share the view that Zoopla has, which is that next year transaction volumes will probably be okay and even up slightly on this year, because I think more people are going to buy homes. But I don't think most first-time buyers, especially first-time buyers, actually factor in the true ownership costs of a home. And by the way, I haven't even mentioned the fact that owner-occupier housing inflation is at 7.4% and rising, which means that your maintenance costs, that's like your car servicing costs, your servicing and maintenance costs on your car, all of it, your insurance, your MOT, your servicing and maintenance, your tires, all that kind of stuff. The inflation on the running costs of your home are running at 7.5% and climbing. Now, what happens to car values when the running costs go up? What happens to those car values? What's happening to all of those nice luxury cars on the market whose car tax is now over £700 a year? Who wants to buy a car, a second-hand car, that's going to cost them £2,000 in car tax in 3 years? Nobody. And so that's why you've got these, some of the lovely old cars, nice luxury, good quality, big engine cars. Nobody wants them because nobody wants to be paying £700 a year in car tax. And as operating and running costs of homes continue to increase, I'm going to talk about new homes in a second, you've got the same thing. People who do their numbers and go, hang on a second, and affordability, bills, electricity, gas, all those energy bills are going to be factored into the affordability equation. It's going to bring the value of houses down. The higher the running costs are, the lower the value of the houses. Right. So new builds, new homes, they do tend to have much lower heating costs, but that's about it. Generally speaking, the build quality of new homes and the premiums at which they are being sold mean that anyone buying a new home is going to suffer serious depreciation and probably horrible maintenance bills in 10 years' time or so. Now, is that a reason not to buy them? No. If you need and want a home and there's a nice quality new home in an area that you want to live in, it's where you want to be, it's where your family is, it's where the schools are, and you're going to keep it for 25 years or something, you should still buy it because you need a home. But if you factor in these running costs and the true cost of ownership, you're going to be much, much more cautious about what you pay for that house. But for the last 25 years, a major part of the housing market has been driven by investment, right? Investors and developers. And that segment of the housing market is effectively being driven out by the lack of easy financial returns that there have been for the last 40 years. So if you're upsizing, this doesn't matter. If you think, well, Charlie, we have to get on the property ladder because otherwise the prices will get away from us. No, I don't think so. I think if you want to buy a home and you're going to upsize to another home in a few years' time because your circumstances have improved, that you can continue to do that. That's actually going to be perhaps easier in the next few years than it was in the last few years, as more expensive homes continue to become better and better value compared to smaller, cheaper homes to run. So it's good news for people who just want a home to live in and then want a bigger home for a family. Right? This is good news for those guys. It's not good if you're downsizing. It's not good if you're just selling up right now. But any investor with half an ounce of intelligence is going to look at actual prices, not national averages, actual prices, actual inflation, actual operating and ownership costs, plus risks if you're investing, plus material and labor costs of refurbing. All of these things have gone up. And you're going to see that it's much, much harder to make the kind of money we've been used to. Now, I can remember going back to the early 90s. You could make money on doing up properties because labor was quite cheap and also materials were quite cheap. That's changed now. It's harder. Labor is much more expensive. Materials are expensive. And so it's not as easy to find. If you go to auction and you buy something and you know what you're doing and you can, you're in the business and you're highly skilled at doing it. Yes, there are still people who can make money doing that. But actually, I think what's going to happen more is that home buyers are going to buy run-down old places and then just spend years doing them up, making them into the home that they want. And that's nice. That's how it should be, isn't it? Imagine you're a young couple, you want to go and buy your first house together, and you're able to buy, frankly, a really cheap place that needs loads of work doing to it, but you can make it your own. That's nice. That's a nice thing to be able to do for a lot of people. But I don't see this changing for at least the next couple of years. I mean, for lots of reasons. I mean, look at the news today. You look at the turmoil in Europe. There is absolutely no prospect of economic growth or real wage growth worth a damn in the next 5 years. Okay. And without that, there's no prospect of the housing market heating up again. Now, what could happen that might change that? Okay. If the government were to announce some harebrained scheme to prop up house prices, and implement it, that could affect it. But I think that this time round, when everyone saw the effects of Help to Buy, which is A, put house prices up out of reach for everyone else, and B, left everyone who paid those toppy prices now struggling to sell or in negative equity, I don't think it will be as popular this time round. I think most people, especially my generation, Gen X, and my parents' generation, are going to go, look, there's no point in inflating house prices so that youngsters can't buy homes anymore. That's not a good idea. Look what it's done. Look where it's left the economy. Look where it's left people's disposable incomes. Right? There's no point in doing that. Don't artificially inflate house prices. Let the market be the market. But I mean, on a daily basis at the moment, I am hearing from sellers going, but we thought we'd been sensible. We didn't think we'd ever priced it. We went with a good agent. We just don't understand. We just don't understand. We just don't understand why I'm not selling. And the answer is for people in that situation is that it's the housing market is not as rosy as it is painted to be by the ONS or the money lenders. It just isn't. And national averages are misleading and cover up the nuances of what's happening in the market. So especially if you're selling from a larger detached house and then downsizing into a semi or a terraced house, that's going to be a painful move because the house you're selling is going to come down a lot more than the house you're buying, which may not have come down at all. I'm hesitating to look in the comments in the live chat. I haven't looked at it at all. But I'm just going to wrap this up with, I think this is good news. I think as long as prices don't crash, I don't want prices to crash. I never have. I've always said that we're going to be very, very painful. I know there are people who go, oh, but a short, sharp shock will be better for everyone. No, it wouldn't, because there'll be huge numbers of people who have their lives irreversibly ruined by that. A continuing slide in house values, so real prices including inflation, is the least painful way of getting back to affordable housing. Just today, the Financial Times put out that story that in the last 10 years, right, the last 10 years, London prices have only gone up 13% in 10 years, which I think is about 1% per year if you compound it. And that's nominal. But when you factor in inflation, London house prices are down 16% in 10 years. That's in the Financial Times today. And I think that's why so many people selling, especially in London, is going, scratching their head and going, yeah, what? And in the investment community, you do have a spectrum of wise and foolish investors. And the wise investors buying property for cash now are making sure that they're buying at very, very keen prices. And so there are people out there selling things expecting cash buyers to swoop in and snap them up. But most cash buyers aren't that stupid. You don't want to swoop in and overpay for a depreciating, high maintenance, expensive to run asset. Why am I going on and on about this? Why am I banging the drum? Because I just want to get it through everyone's heads, especially people who are planning to buy their first home, that the financial reasons that you've always assumed are there to buy aren't there anymore. I'm not talking about comparing it with rent or not comparing it with rent. And I'm not saying that this changes the equation about buying or renting. But if you are planning to buy because it's a good financial move, I don't think that's the case anymore. And I don't think it's going to be the case for the foreseeable future. Happy ending. In a few years' time, house prices have settled, wages have continued to increase, affordability returns, immigration gets controlled, and we get immigration under control, because that's been also a very, very inflationary effect on housing, especially in the rental market, but also in the house price market. So if legal migration is controlled into sensible numbers again, and we don't have population growing too fast, that will also help prices settle down. And then people might be able to afford homes again, and then people might want to have families again. And then Britain may have a chance at economic prosperity again. Okay, but we are, as Alex and I started saying 2 years ago, we are now in the grips of an economic slide. The ONS's numbers can't even be trusted anymore on any front. They're even admitting that. They're saying, we don't know what the jobs numbers are, and we're not going to know what they are for a couple of years. So the ONS is struggling to give any accurate data whatsoever. But on the street, people are feeling the pinch really badly. There are still lots of people who've got good jobs and they've got money, and that's okay. But overall, society as a whole has got a lot less. And as Alex pointed out, with the savings after the effect of inflation, we've actually got 200 billion less, no, 300 billion less than we did have equivalent for. I can't remember exactly what that point was, but go back to that video where Alex explains that, right? Okay, couple of quick questions, and then I've got to turn in. You guys all seem to be fighting with each other. Yeah. Festi says security turns to prison if negative equity strikes. Worst setup for purchase ever. Yeah. All right, guys. I'm just going to wrap it up. That's a bonus video. Wasn't expecting to do one. Tomorrow is Friday. I'm at an estate agency industry conference all day tomorrow and all evening tomorrow evening. So I'm not quite sure what form 5 Fact Friday is going to take tomorrow, but one way or another, it should happen, even if it's very late tomorrow night. But otherwise, Metal Mouse says, if homes don't sell, there'll be more people renting, which will increase. Homes are going to sell. They're just not going to sell at the prices people want. And if the people who want to sell a house and can't don't sell it, they're just going to stay where they are, aren't they? Or they're going to rent it out if they can't afford to stay in it, increasing rental supply. Marco Renato says, is there any hard data that buy-to-let is dying, or is it just sentiment? No, there is. I don't have it to hand, but the buy-to-let mortgage rate figures, the numbers of them are way, way, way down on where they were. There are some people doing it still. I mean, in fact, I had someone in the private movers club saying that that's what they were planning to do. They were planning to do a buy-to-let mortgage. In fact, I had two of them going, do you think I should do it? And I've walked them through the numbers and gone, you tell me, what do you think? I wouldn't do it now. I've been a landlord, right? I know what I'm doing and I know how the market works. I would not do buy-to-let investment now. And all the intelligent investors think the same. They realize that it's just the risks are too high of not getting your asset back, and with the government legislating against you relentlessly. Yeah, but see, interest rates now aren't much higher. They are just normal. We are now at normal interest rates. Yeah. Shameless on YouTube says, anecdotal, I'm seeing everything closing down. Home base, local super drug, big local restaurant. It feels it's getting real. 2 houses on my street dropped asking prices 5 to 7% and not selling. Yeah. Hoxton Hotspur says, I'm a London black cab driver, and I can testify that shopping streets like Oxford Street are a lot quieter than last year. Well, I mean, we had those retail figures out, didn't we? November retail was 3% down before inflation. There's a definite sense of contraction out there at the moment. Siddhartha Bomik says, but what about all the property gurus on YouTube who are still propagating and promoting the buy-to-let, rent-to-rent, BRR, BMV schemes to invest? Yeah, I mean, you see, there was a whole industry. Honestly, a really good friend of mine back in the early 90s, it was the mid-90s, and things started to pick up. A really good friend of mine who I was at school with said to me, because he started. He said, "Charlie, I am thick as pig shit, and I'm making a fortune. Any idiot can make money in property right now." That was in the mid '90s as the market was picking up. And this is the point. When it's all really good and really easy, you get, I mean, literally anybody could do it. And people were thinking, oh, I'm an absolute financial god. I look at how much money I'm making. But it had nothing to do with any financial acumen whatsoever. It was just easy for anyone who wanted to do it. And so you get all of these so-called experts springing up around it, going, oh, get rich quick, all this kind of stuff. They're all kind of scratching their heads now. And they're giving away their courses for free. Or buy my course, it was £500 and now it's £1. I'm afraid it's all over for those guys. That party is over. Yeah, my GB News interview screens tomorrow night, Friday at 7 p.m. And I got to talk about that squeak is, I'm sorry, it's this noisy radiator. Yes, correct, Jim Bob. There's more money, but the money has less value. Absolutely spot on, quite right. Yep, Jack Waldron, I think you might be right. Carlos says, question, given the current market is being a cash buyer less advantageous, would it be smarter to take out a mortgage and invest remaining funds elsewhere? Right. That's a purely financial question, and you know, that's not what this channel is about. I actually, that's just numbers game. If you think you can make a higher rate of return on your cash than your mortgage costs you, that's the risk you take. But you're rolling the dice a little bit. You're rolling the dice a little bit, but it's as simple as that, right? If you can make more on your cash than your mortgage costs you, that's up to you. But you know what's definitely true is that if you rent frugally and you live frugally and you save money and invest it elsewhere, you can save up enough to buy a house outright, perhaps faster than you'd pay off a mortgage. Richard Preen says, what are your thoughts, advice on buying a house with a flat roof? Home insurance is more, mortgage harder to get. Yeah, all of the above. You know, every property I've ever known with a flat roof has at some point had a leak and a roofing issue. It's not the end of the world, not the end of the world, but there's a reason that they build houses with sloped roofs. Siddhartha says, I believe the greed of a few has overwhelmed the needs of many. That's what's wrong with all economies. I agree with that to a certain extent. But it's not, you see, when you, as a government, you make rules and policies that motivate people to do these things, it's the policymakers. You cannot blame anybody for investing in buy to let when it made sense to do so, right? Why wouldn't you? It's not greedy when hardworking people save up a bit of money and want to invest for their future and their pension. And they think, well, hang on a second, I can do it buy to let. That doesn't make them evil, greedy people. If you're trying to invest your savings into some form of pension for the future, the problem is that when the government made it too easy to do that for too many people, it ended up consuming too much housing stock and putting prices out of the reach of first-time buyers. So it was a policy problem, and I don't like. Yes, there are speculators. That's different. There are people who actively speculate on properties at the expense of other people. But retail investors, you can't blame anyone if there's easy investments going. We look at Bitcoin at the moment. I was chatting with Alex about that. I think in the long run, who knows what's going to happen? But I think let's see what happens the next few months. Jay Davis says house prices in the UK have been negatively impacting the economy for 20 years. Agreed. Absolutely agreed. Chen Gucci says, how fast would you expect a good agent to get viewings and an offer from the moment it goes on the market? Right, a really good agent will get you viewings before it even goes on the market from their existing register of buyers. If they're only good agents will have that, right? Only good agents will have invested time in having ready to go what they call hot buyers. Okay. And a really good agent will have viewings lined up before it even goes on the market. A good agent would definitely have as many viewings as possible lined up in the first week to 2 weeks, because you've got to get them in there at the same time to get them competing against each other. If you don't have your property under offer in 28 days tops, then there was a problem either with the pricing or the presentation or the promotion of it. You've got to get those three things right. You've got to get the presentation, so the photographs, everything else, the promotion of it, where you're going to promote it, where and how, social media portals, website, sending it out by email to the applicant database, all that kind of stuff. And you've got to get the price. That's the most critical thing, is to get the price right. I saw someone today commenting on a TikTok video of mine going, "Oh, I'm really pleased because my agent says that they already got 3 viewings booked." It's not enough. You to really, I mean, unless you've got a very rare property, a rare, unusual, beautiful property where you're going to get the first 2 or 3 people through the door are going to be bidding it and buying it. Conventional, more ordinary, more run-of-the-mill properties, you need 10 to 15 people through the door within the first 2 weeks to be sure that you're going to have 3 or 4 competing bidders, which is what you want. That's true. If house prices stay flat, people won't be able to remortgage easily to splash it out. Also true. Wow. Kieran Lehane says, worked as an estate agent for a couple of years and found this channel invaluable. Now studying building surveying. Don't have a question, but wanted to let you know you've been a big help. Thank you, Kieran. I don't often get that from estate agents. I do get it sometimes, and it's very nice when I do. But I'm delighted to hear that it's been helpful to you as an agent. And I think we're going to finish up with Mike's comment here. I always consider a house a place to live, not to speculate. So let's just finish up. We're wrapping up and recapping what I've been saying. Where's my comment I want to put back on the screen? Here it is. For the foreseeable future, you should treat the purchase of a house as you would the purchase of a car. If you buy a brand new one from the showroom, it's going to depreciate faster than if you buy a second-hand one. But if you buy a second-hand one, the maintenance costs are going to be higher. They're both going to depreciate in real terms, while inflation remains higher than house price growth, which is basically zero, especially in England and Wales. So understand that if you buy a home now, you are buying a depreciating, high maintenance object. I don't even think of it as an asset. I think of a house as a liability in the same way I think of a car as a liability. But you still buy a car because you need one. So I'm not saying don't buy one. I'm just saying don't think it's an investment, because currently and for the foreseeable future, it isn't, and it won't be. That may change a few years down the line. But if I had to sell within 5 years, I would not be buying now unless I was a cash buyer and I was willing to accept the risk of my property devaluing. If I had to buy with a mortgage right now, a high loan to value mortgage, and I had to move within 5 years, I'd be worried. I'd be really worried. And so if you are buying a home with a high loan to value mortgage now because you want a home and you're planning to keep it long term, cool. That's much lower risk. But if you think you're going to need to move in 5 years, or even if you might need to move, let's just say that the marriage doesn't work out how you hoped. Let's just say maybe kids come along you weren't expecting, and maybe life throws you curveballs you weren't expecting, and you need to move. Think that eventuality through. It's really important. And when you talk to your mortgage brokers, ask them about, like, what can we go through the what ifs? What if life doesn't go as planned? What are the early repayment clauses? Can I port my mortgage, etc., etc. But if you are really careful about what you pay and you only offer what your maximum comfortable price is, and you don't get sucked into bidding contests and overpaying, then you reduce the chances of it. And especially when you're buying new builds now, where the new build sellers are just telling you that, no, that's the price you have to pay, that or nothing. Hold your ground. Do not offer more than you want to. You can offer any amount you like, right? I remember people saying to me, can I offer this? Can I offer that? Is it allowed? You can offer anything you want. You can offer anyone anything for anything. Always. You don't need anyone's permission to make an offer. But when it comes to new builds, and they tell you, if you want the house, that's the price you have to pay. Guff, right? If it was true that that house was worth that, they'd already have sold it. They wouldn't be trying to sell it to you. So just nod politely and go, okay. Right. And then when you put your offer in by email, make sure you don't offer more than you're comfortable paying. And expect them to negotiate hard, but just go, look, that's my maximum comfortable price. Dum, 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 dum. Don't say that. I'm test driving a new M3. Oh, new cars. I mean, I learned my lesson with new cars a long time ago, luckily. Oh, look at that. Nigel D. I am an investor, but I refuse to invest in property. Very wise, Nigel D. Seamus says, if you're considering buy-to-let, get your head checked seriously. Yeah, I agree. And S. Williams says, the government of Wales has been heavily legislating in the tenancy market for a while on tenant protection, EPCs, etc. Buckle up, landlords in England, it's coming your way. Yep, and that's going to be making homelessness worse. Right. I'm supposed to be chilling out, not doing this, not working, but I just, this was burning a hole in my head and I had to get out there. And if you're an agent watching this, or if you're a seller watching this going, no, Charlie, why are you saying this? Don't worry. 95% of people out there don't watch my channel and they won't have heard about it. So they're just going to come along and happily overpay. So you'll be fine. All the best, guys. Have a good one. And if you need me, find me. There are links in the comments below, link in the description below if you need me. Otherwise, have a great night.